Good afternoon and welcome to GrainTV. It's February 12th, 2013. I'm Logan Burgess. To my right here is Cody Bills. Well, Cody, let's jump into fire tip. See how the grain's traded on a Tuesday. As we can see, we had corn off 5 3/4 for the March contract. Soybeans down 10 cents today, and wheat was the leader to the downside. We had Chicago wheat off 9 3/4, Kansas City wheat off 11. If you guys want to get live quotes or take a look at the trading platform you see here for yourself, visit us over at grainhedge.com. You can take a no-obligation demo. Cody, we're going to start out today talking about wheat a little bit. As I said, the leader to the downside today. We had some fundamentals pushing that wheat market. What was kind of your take there?
Yeah, well, we know the wheat conditions are just awful, especially hard red winter wheat in the southern plains. You know, one of the things that we did notice early on today is that there will be some snow that's moving into that northern Texas, western, kind of southern Oklahoma area, an area that's been just parched by drought in the past. So this is really good. It's good to see the moisture come in here. And if you take a look at the wheat chart, you'll notice that we kind of broke right down through lows, and it looks like we'll be trading lower. Wheat was the grain that traded the most to the downside today. Kansas City wheat in particular, closing off at 777 3/4, down 11.
Yeah, you know, soybeans had a relatively weak day today as well, off 10 cents there for the March contract. And if you want to switch over here to the March daily chart here, as you can see, it looks like we have a pretty good ceiling on this market right now, around that $15 a bushel level. We did have the USDA come out on Friday and actually lower projected ending stocks for beans by 10 million bushels here for the current marketing year, and we've had 3 straight days of selling on the heels of that. We broke down through this 200-day moving average, and it looks like we are going to retest the kind of the bottom side of this range right around 1350 here, 1375 on the March contract. Today, you know, we saw a relatively weak trade. Wouldn't be surprised if we got down around 14 here once again, and fundamentally right now with this large South American crop kind of hanging over this bean market, certainly the fundamentals are turning more bearish. And one thing that we've heard some news about just in the recent days was that Mato Grosso is expected to remain more dry for the remainder of the week, and that's been one concern, is that they've had a lot of rain, but almost too much to the point where getting those beans out of the fields is going to remain a problem here moving forward. So it does remain drier there. Additionally, on the export front, we have the Chinese right now. They're celebrating their Lunar New Year all week long, so they're not going to be in the export market. Certainly expect some light export sales of beans this week. So overall, it looks like soybeans drifting lower here.
Yeah, it does seem so, and I think that it has some legs to the downside. I guess I'm a little bit more negative soybeans than I am corn, in particular, just because we did consolidate up around that $15 price level, and we had what I kind of interpreted as a little bit more bullish USDA WASDE report, and of course we had a negative reaction to, in my opinion, a more bullish story than any of the other grains, and it came off very hard. I think what that means is that we could see some unwinding of positionings of positions that have been put on here, and I think that it has momentum and could penetrate even below 14 down to what you were saying, kind of that 1375 price level.
Right. Let's hop into corn here real quick, Cody, and this is a big story people are talking about right now. The 8th straight day of lower closes for this corn market. Corn's really lost its footing in the last couple sessions. We're testing some kind of key price levels today. We were able to close below $7 a bushel. Last trade here was at 696.5 there for the March contract. What's kind of your outlook on this corn market, Cody? You know, we did see ending stocks raised last Friday by the USDA, but it really seems like something has to give at some point after all of this pretty sharp selling.
Yeah, and I would agree with that. I think, quite frankly, I think we're a little bit oversold. I'm a little bit more friendly corn than I am beans and wheat right now. I think that you know, we have had 8 days trading lower. We are right around that $7 price level. We are right around this support down around this area. I think, you know, we didn't close off on our lows like we did for soybeans today. I think that there's a good chance that we could snap back. Wouldn't be surprised if we close over $7. One of the fundamental reasons for that is we did see some ethanol plants come back online that were in idling, and so I think that that's going to help out. I know that the ethanol margin, their profitability margin, is getting a lot better after weeks of being very, very depressed. I think that's good. And then when you look look at feed and residual use, that part of the supply and demand report, if you look at the quarter that they reported back in January, kind of that average price between that September and December period was significantly higher than what we're trading in the lower side of this range. So I think, and then we had to revise, as you remember, we had to revise that feed use up. So I think we cannot afford to have feed use be revised up even further, and I'm concerned that if you drop down below the 680 level, that it will spur on more ethanol use. We have seen the margins increase, and it could spur on feed use, and the balance sheet can't afford that.
Right. Well, very important to the corn market. Tomorrow we will be getting EIA ethanol production numbers out. Then Thursday we have export sales. As we said, we expect light soybean sales here for the week, but we'll have to see how corn does. Corn has really had a hard time throughout the marketing year, really establishing itself on the export sales front. And then Friday, really important to the soybean market, we're going to be getting NOPA crush numbers. One very important piece of news that we saw today that we were discussing a little bit was there are now expectations out from Oil World for the U.S. to import soy meal in the coming months, basically to fill the void there on a short soybean stocks right now that are going to be crushed here in the coming months. So very important to keep an eye on those NOPA crush numbers out there on Friday. We'll be keeping you posted on all those reports on Twitter. You can follow us over at GrainTV is where you can find us on Twitter. But I think in general that wraps up what we saw in the grain market for today. Thanks a lot for joining us on GrainTV, guys. Have a great night. We'll see you tomorrow.